right, we give you your markets early now. Asian markets close mixed ahead of the Fed's rate decision later today. The Japanese Nikkei index declined despite shares in car giant Nissan soaring by more than 20% after reports that it was in merger talks with rival Honda, while Hong Kong and mainland China stocks registered gains on the day. The Nikkei share average declined by 0.72%. The Hang Seng index rose by 0.83%, while the Shanghai Composite Index ended the session 0.62% in the black. All right, U.S. markets all closed in the red yesterday, with the Dow registering its 9th consecutive fall. Investors were said to be exercising caution ahead of the big interest rate announcement this evening from the U.S. Fed Reserve. Meanwhile, U.S. retail sales data rose more than expected in November, partly influenced by an acceleration in the purchase of motor vehicles, continuing to suggest the resilience of the U.S. economy. The Dow Jones Industrial Average declined by 0.61%. The S&P 500 lost 0.4%, while the Nasdaq Composite Index closed down 0.32%. All right, and we see on our local markets, the all-share index currently trading in positive territory, while on the commodity front, we do see that the price of gold is at $2,648 an ounce, platinum at $936 an ounce, while Brent crude oil is trading at $73.65 a barrel. In terms of our currency, we do see that still lagging against major currencies, trading at 18.05 against the US dollar, 18.94 vis-a-vis the euro, and 22.91 against the British pound. Well, for more on the markets and to give us his analysis, I'm joined by James Turp. He's the head of investment strategy for fixed income at Sanlam Investments. Thanks very much, James, for joining us. So all eyes are on the US Fed this evening, the highly anticipated next move on interest rates. It seems that 25 basis points is believed to be a given, but beyond that, there is a lot of uncertainty.
Good afternoon, Nompu. Thanks for having me. You've just answered the question yourself totally correctly. It's discounted for by 95% that they'll cut 25 basis points this evening. However, it's going to be all about the path going forward, and where you look for that is the dot plot, the indication of where rates will be going coming out of the Fed, and the tone of the statement. There have been some more recent developments which show that inflation perhaps sitting a little more stubbornly at this 3% level. Remember, they target 2% over there, and that's really the story. The uncertainty of the path going forward. As I look at what's being discounted, very little for each consecutive rate meeting starting next year. And that's compounded by the new government, the new president that's coming in as well. So that's going to set up next year for us.
Yeah. We know the US is pretty much the leader in the world. It's the largest economy, and we tend to look to the US markets to give us some kind of guidance as to which direction we're going. We've seen a lot of declines on the Dow Jones, for example, and yesterday all of the US indices were down. And here at home, also the all-share index was also down. And yesterday, Asian markets were also in negative territory. Why are we seeing this downward trend taking place? Is it normal at this time of the year as people perhaps maybe sell off and take some profits ahead of going on holiday?
That's a good point you make, and that definitely is a factor to markets that have been performing strongly, like our own bond market, for instance, which we can talk about. But back to equities, it's a case of two things. It's this uncertainty around the path of interest rates, where it was quite solid that we would get these quite quick cuts out of the US, and that's been walked back a little bit. So risk markets, equities, for example, have taken profit. So people that have had great performance out of equities this year, certainly in the US, have taken some of that off the table, and definitely because of this uncertainty now about next year's moves on interest rates. So that's exactly right. We're seeing it across the board in certain risk markets. that have had such good performance that it's time perhaps just to take a little off.
Yeah. So since the bond market is your area of expertise, I don't tend to ask about the bond markets because it can be confusing. But since that's your forte, just tell us what the bond market here at home is telling us about investor appetite to invest in South Africa. And we know that the bond market is correlated very heavily with the rand.
It's a brilliant question. And the bond market, we often say, tongue-in-cheek, as fixed income investors, is the smart monies. It tells what the economy is going to do before the time. You can pick that up from bond markets across the globe. Here in South Africa, our bond market has done extremely well this year. Of course, we've had positive political developments. However, there's some caveats there. Of course, we're not investment grade, so the amount of capital we'd like to see pouring in has been restricted because we've not got that investment handle on us just yet. But we've seen some positive developments, and that's played out in the bond markets. As we are at the moment, still some small foreign interest in our bond market, but things are really slowing down. And from now until the end of the year, the bond market actually closes at 12 o'clock. So the market, for all intent and purposes, is going to be thin as a result. So we've seen erratic movements because there's really little interest at the moment directionally until we get the Fed out of the way. So long story short, it's been a great year for bond investors in South Africa, walking some of that performance back at the moment, going into the Fed. And then traditionally, you would expect bonds to have a stable year end and opening in January. And then I think we'll get a little bit of volatility with the uncertainty around tariff policy in the US and the next move for interest rates. So I think we're going to see a little bit more volatility in these thin markets and settle down over year end. That's the wish.
I think you've alluded to it, but as we close our conversation, as we look to 2025, what do you think are going to be the key factors that influence the financial markets? And I suppose the Trump factor will be a big one.
Yeah, exactly that. It's going to be about tariff and taxes in the US. What is their foreign policy going to look like? How are those headlines? We know from the previous Trump presidency that a lot of the market was influenced by these headlines that come out and then get walked back all the time. So I expect it to be volatile. I also think foreign policy with regards to this situation between Russia and Ukraine, the Middle East as well. And so I think there could be some positive spin-offs. Perhaps geopolitical volatility cools down. That could be a possibility next year. But the first thing I think is going to be all eyes on tariffs in the US and how is that going to affect inflation back in the US, of course. And for us as an emerging market that looks to China for support in buying our commodities, we're going to be paying a lot of attention to that too.
All right. Thanks very much, James, and all the very best as you enjoy your festive holiday. That was James Turp. He's from Sanlam Investments.